Welcome back to another episode of the Creative Finance Playbook Podcast. I'm your host, Jen.
I'm Joe.
And today we've got special guest Michael in the house, and we are so excited to hear about his journey. We're going to talk real estate, we're going to talk coaching, and how to be making money and building wealth in 2025. Thanks so much for coming on today.
Thank you guys for having me. It was great to have you guys on the podcast. I'm glad we could finally make it where I could be on the much larger, more successful podcast with Jenn and Joe.
Oh, man. It's just, we literally were just talking. It started out just a weekly. He'd go live once a week, every Tuesday. And over the years, it turned into a podcast. So consistency is key, as they say.
Yeah, it's been over 3 years now. And it was just, I had the urge. I'm like, let me just start sharing what it is, like the deals that we're working on, how we're finding them, how we're buying it without banks and credit. And once again, it turned into a podcast. One of my friends like, you got to do this every week. And so that's what we did. But we're going to talk about some of your stuff. So Mike, where are you based out of?
So I'm in Houston, Texas.
Nice and hot down there right now, just like it is here.
Yes, sir. That is correct.
So you've been doing some real estate, right? What's business been like for you? Like, what was life like before you got into real estate? I want to kind of go back there.
Yeah. So I never believed in a job. And I know that kind of hits people the wrong way. And let me explain what that means. I never believed in a job because I saw my father run a swimming pool business when I was a kid, and it was like feast or famine. So all summer long, he would work 7 days a week. And then when the wintertime came, there was nothing to do but ride four-wheelers and shoot guns and live a good country life. And we had to live on whatever he made during the summer. Like fast forward to my first real job, which when I was a kid and I had no school, guess what I was doing? I was getting up at 4:30 in the morning to go dig swimming pools with my father. But fast forward to where I'm actually getting paid, and it's a real job. I worked in the oil field. Well, I worked in oil and gas, not in the oil field. I worked in oil and gas, and we built land-based rigs, and you knew when your job was coming to an end because the project's almost done. You could see it every morning when you drive up. Oil rig's almost done being built. And so every 6 to 9 months, if we didn't get another contract signed to build another rig, they love to tell us that you boys are about to get a vacation. And so we would get laid off and go draw unemployment. And maybe in 3 months, we would get another contract, come back and start getting to work. Sometimes it'd be 6 months, but there was that uncertainty there. And so I thought the key was I got to be white collar, right? This blue collar thing, this is not stable enough. This is not the life I want to live. So let's be white collar. So without a college degree, I grind my way into the white collar world. I work my way through safety and risk management, and I switch industries a couple of times, and I find myself in telecom working for a company where we are just growing, buying and merging we're buying mom and pop telecom companies and merging them together. And we take something to from about 180 million in revenue to 1.1 billion a year in revenue, and we go public. And I was able to work my way onto the acquisitions team, so I'd fly out all around the country and go do due diligence on businesses that we were going to buy. Guys who wanted to retire and just sell their business, and we'd be like, no, just sell it to us. Don't liquidate everything. And so even then, for that job for 8 years, which that was the most stable career I had for 8 years. I never got laid off. And from coming from oil and gas or coming from a father with a construction background, 8 years of employment was amazing. But I still, every step of the way, I felt like it wasn't real. The job could have ended at any time. I was like expecting every winter, because that was in oil and gas and in my father's background, winter's when you get laid off. So anytime like we didn't make bonus for the year or something, I'm like, this is the year. I'm losing my job. And so
well, that's the challenge with having a job when you work for somebody else. There's so much uncertainty.
that is right. That is right.
And I've felt that with my dealership job, and I know even you did with teaching.
Teaching, yeah. Less students, they might not need me. And that was definitely, I would be on the chopping block.
This is why I always say, and everybody's crazy when I've said it, but start your side business now. Start building it to where maybe your job, like you say, lays you off in the winter, or just, it goes away. My company actually got bought out. Luckily, they kept me, but, everybody wasn't so fortunate. So that uncertainty, I could see why it's probably giving you some ideas of like, hey, I got to do something more than this.
That's right.
It's like deep seated too. That's some stuff you got to work through.
Yeah, that's right. And when I saw the fruits of the labor of the company going public not being spread around as they were promised, I knew I had to start building something for myself. And so I was fortunate enough to where I didn't have this identity trap that people get stuck into where it's like, I am Michael. I have to have a nice car and have a nice apartment and have a nice this and have a nice that. I just thought I have to be financially free and secure. And so I went from like, I don't know, this was, I don't know, 9, 10 years ago. I was like renting an apartment and I would travel each week for work. I would fly to a different city every week and then fly home. So I was like 100% travel for like 8 years. And I was like, what do I need an apartment for? I was single at the time. So I downsized into renting a room because I'm only home on the weekends. And you know how much money you can save when you do that? And then when I met my wife and got married, and God bless my wife, I was like, hey, I want to do this thing called house hacking. And so for anybody listening who doesn't know, that's where you buy a duplex, triplex, or fourplex, live in one unit, rent out the others, or you buy a house with a lot of bedrooms and rent out the bedrooms. Well, we were searching, we were running out of time, and my wife needed to move to Houston before the next semester of her school started because she was in a master's program. And so we ended up buying a large house in an older part of town and renting out by the room. And I just thought, hey, I'm paying $600 to rent a room now. If I can have a house and my portion of the mortgage and expenses is only $600, I'd be doing great. Well, through the miracle of real estate, which you guys know, rents go up over time, and I've just always made more than I expected to make on every one of my investments, and I was living in a house for free like that, and so now I'm living for free. We're plowing our money into the S&P 500 because I don't know what to do with it, and it sounds like a happy ending to a story, right? Because we paid our cars off and we're living below our means, and I'm traveling for work, and my wife's in a master's program, but what it really was is I rested on my laurels. I was consumed by fear because I had done my first real estate deal. And by the way, I did that very creatively. Not, I did that in a way where I got paid $800 at the closing table. So I got paid $800 to buy a house and live in it for free. And I was surrounded by people that were like, my boss was making $250,000 a year. I wasn't even making six figures at the time. And I remember him making a comment one time of, I just can't get breathing room to put money into my IRA. And I was like, "Oh my god, like, is this what I'm trying to become? Like, is this what I'm leveling up to?" And he was at his time, he's in his late 50s, he's losing his hair, and I found there was a ceiling I couldn't move up on until these people retired or left the company or whatever. And, so I was kinda resting on my laurels for, like, 4.5 years. I lived for free in House Hack, and I just went into study mode, and I was watching every podcast, every audiobook, saving my money, and I was afraid to move forward. And what really got me over that fear is I watched an interview with a little-known man named Tom Kroll,
Mm.
and Tom was on Bigger Pockets, and this is old school Bigger Pockets podcast, and Tom was on Bigger Pockets, and he said something about if I had 20 grand, someone had a question, and or maybe maybe Josh or Brandon had a question. He said, if I had 20 grand, I'd set the world on fire with direct mail. It's the exact quote. I remember it. He had long hair, he had glasses. Tom looked very different back then than he does today. Um, and at that time I went to a meetup. I heard that and I was just echoing in my head. I was like, okay, direct mail. And I went to a meetup, and by the way, anybody new getting started, if you're not involved in meetups, they're free, they're all around you. Get involved in meetups. You need to see and feel and be immersed in it happening in order for you to like believe you can do it.
Bam. Thank you for saying that because I'm somebody who just doesn't love meetups at times. Like, I'm like, oh, the kids need me, or I got stuff to do around the house, and I'm a little more of an introvert. But this guy, he's the extrovert. And so he's like, we're going to go. We're going to just see who we can meet. And every time we go, I am so happy.
Well, and I think that's the point too, is getting out of your comfort zone. Like if you're going to do something different and you're going to get out of the same what everybody else is doing, you have to. And it's the great thing about it is you're in a place, a safe place, but there's other people, like-minded
Hmm.
investors who are on the same path.
Put yourself in the room. That is a note that if you're listening, not driving, write that down. Get into the rooms. Go to Facebook, go on meetup.com.
Well, if you want to do deals, that's where the deals are
Yeah.
happening. A lot of them are happening. A lot of the connections and relationships. A lot of people that I've met at these places, we've done business and made money together. So
Hmm.
if you're sitting here listening, scratching your head, like, where do I get started? Like, there's meetups in your town or city. If not, create one. There'll be other investors who want to be there and start shaking hands, hugging people, kissing babies, doing all the things you're
And
going
like
to do.
take your phone and like just like start connecting. Like, give me your phone, right? Like, and just make sure everybody has everybody's phone number because that's how you can do deals together and make some money.
That's absolutely right. When a new person comes to me and says, I want to get involved, what am I doing? I want to look at their calendar and I want to see meetups, I ask them what books are they reading, what meetups are they going to, what steps have they taken. If they got none of those questions answered, I know they're not taking the right steps. So the easiest one is go to meetups. They're free and they're all around you. And
If you
so
saw my calendar, it would probably
Freak you out.
terrify you. But yeah, and you're right. You got to make the time. And if it's even carving out that time, you got to make it a priority, just like you would a doctor's appointment, just like you would some other big appointment. You have to make that a priority in your life and put it on your calendar for sure.
that's right. And so
I've got some of mine.
yeah.
I got a bunch.
Yeah. So the turning point for me was I heard that podcast with Tom Kroll talking about setting the world on fire with direct mail. Direct mail was hot at that time, and it still is depending on the market that you're in. And but not with you guys, because you guys show people how to get leads for free. You don't have to spend money on direct mail the way we do it around here.
I mean, I've done direct mail and it works. I mean, every way works, and I think that's the way. But you know, when you're finding a way to do it, and especially not having a huge marketing budget, because I think to me, like I know Tom says that, and he's right. But there's a lot of people listening right now that says $20,000, like they don't have that, right? Or maybe they do, but they can't see like, oh my gosh, how do I go spend that in direct mail? And then even more importantly, like what happens if people call me? Because like they will, you'll get people that are going to call you. So I'm not saying like direct mail is definitely not the way, and it is. It's one of the ways.
One of the ways. There's so many ways. Just pick one or two to get really great at it. I think sometimes people are like, oh, I'm going to try it all, and then nothing happens.
Yeah.
Do you see that too?
Yeah, all marketing channels work if you do, and I tell people that, and that might be a little strong because people kind of like, oh, spotlight's on me. I thought I'd just push a button and get money. And I'm like,
Oh,
no.
yeah. I mean, the AI doesn't do it all for me, like the commercial said.
Yeah.
Yeah. And so I went to the meetup, Tom Kroll ringing in my ears, and then a guy just bought a deal. You guessed it, direct mail. And I'm like, well, how did you do that? He's showing me it was a duplex, and I wasn't I had no interest in duplexes at the time. And he was like, let me introduce you to my mail guy. And so you can do mail yourself. I mean, if you read, there's books like Brandon Turner's book. He sat down at the kitchen table with him and his wife, and they hand wrote direct mail. But I used a mail house, and I was like, okay, worst case scenario, it's $20,000. It just took a few grand for me to get my first deal through direct mail. And this is the power of network, guys. I tell people this. I had this model, self-limiting belief, whatever you want to call it, in my mind that the stepping stones are I get deals and I wholesale them. And if I wholesale enough deals, one day I can flip. And then I flip enough houses. And if I do that enough times, maybe one day I could do this wonderful thing called buy and hold, build assets, own real estate. That was the structure that was put in my mind. And when I got my first deal through direct mail, and I'm living in, just be honest, I'm living in a rougher part of town, older house. I was in it to win it, and I'm going on sellers appointments in the suburbs and the nice parts of town where people want to be, where the school districts and the tax rate was favorable, and everyone wanted to be here. It was called Katy, Texas, west part of Houston, Katy, Texas, where everyone wanted to be, at least at that time. And I mean, it's still a great place to be now. And I get a deal under contract, and I remember what I was told from networking, that if you find a good deal, the money will find you. I know our friend hates that. Who's our friend that hates that? It's the private money authority, Jay Connor. Our friend hates that. He hates saying that. He's like, find the money first. I was on his podcast, and he was like, we don't say that around here, Michael, but I was taught, find a good deal.
Well, he's the private money guy.
He's the private money guy. Yeah, well, you can't expect Jay to not,
He knows where the money is.
first.
Yeah,
for sure.
He knows where the money's at. Ain't that the truth? And I got his book right
Jay,
here with me.
Jay.
I love Jay. Yeah, and I loved being on his podcast too. And so I just had this belief that was drilled into me that if I find a good deal, the money will find me. And so I found a good deal, put it under contract, go talk to my network, which if you guys say you don't have a network, yes, you do. It's on Facebook and it's in local meetup groups around you. And I said, hey, I got this deal. I'm probably going to wholesale it. And so I showed it to someone. They said, wow, that is a good deal. You can wholesale it, but let me connect you to a private lender. Maybe you can buy this thing. I'm like, okay, I'll buy it, and I guess that means I'll flip it. Okay, so instead of making $10,000 on a wholesale fee, or maybe a little more, I was like, okay, I can flip it and make maybe $45,000, which is like amazing because I mean, do 2 of those a year, 3 of those a year, and that's your salary, at least for me at that time. And then I talked to the private money lender. We go look at the property and we look at the deal. And he's like, I'd love to fund this for you, Michael. What are you going to do with it? I was like, what do you mean what I'm going to do? I'm going to flip it. And he's like, have you talked to like the long-term lender, the conventional lender? Have you thought about doing like a BRRRR method with this? And I'm like, no, that had not computed. So he connected me with a Fannie Mae, Freddie Mac conventional lender. And my mind is blown at this point because I'm just thinking you just wholesale. Like you got to do hundreds and hundreds of wholesale deals before you can hold real estate. And then the lender says, man, with a deal like this, not only can I fund this for you, I can probably do 10 of these in your name. And then we can do 10 in your wife's name. And then we can switch you to a different loan product. And the sky's the limit if the deals keep looking like this. And so I didn't even know this. I stumbled backwards into this. The reason I could do that is because I was renting out the rooms in my home. And I was claiming on my taxes the rental income from my roommates. And I didn't know this, but I learned later. Someone told me, yeah, most people just put that money in their pocket. I was claiming it on my taxes, which allowed me to take write-offs, which allowed my home to be partially an investment, partially a primary resident. And that washed out my debt to income ratio. And I know I'm speaking Greek for some people here, but talk to a lender or learn what your debt to income ratio is. My debt to income ratio was nearly zero because my car was paid off and I was living in a house where my roommates were paying me and I was claiming it on my taxes. And then I was buying these houses so cheap that the rent that comes in was washing out my DTI, and my lender was like, the sky's the limit. So I went from maybe I can wholesale from direct mail to I got to get more of these houses. And I continued though to live in that house hack situation. I was in, and it's funny, guys. It's the opposite of what the media tells you, that we're big bad real estate investors on a hill with a monocle driving a Rolls Royce shaking down poor people. Because I lived in the hood, call it what it is. It was A-Leaf. It was the edge of Chinatown. It was a rough area. And I was driving my 10-year-old paid off car out to the suburbs where my tenants were like, I can't park my BMW on the streets. I need to have garage parking. I'm like, well, wonderful. We have garage parking. This property has a garage. And so when I can see the credit reports of my tenants, because that's what you do when you're a landlord, I'm like, these people are renting from me. They have these car payments, terrible credit. And me and my wife are like it's just, the reality is completely opposite of what we do. Like there's plenty of people who live a great life and are still below their means, but we were just always determined to live on 50% or less of our income. And so we were like, like I heard gunshots not far from my house, and we're loving we've got cameras, we're safe, we're living our life and we're loving it while we're building out a rental portfolio. And we stayed in that house hack until we could move into one of the rentals in Katy, where then the rents could pay for our house. So the house I'm in right now, same thing, a private money lender funded it. I found it with direct mail. And I bought a house nearly 50 cents on the dollar in a great area, great school district. My mortgage is super low, and we moved in here, and then cash flow from other properties pays this place off. So now I graduated. I'm a big boy because I don't have roommates anymore, and we're living on our own.
Well, and I think that's a part of it too, which is great because that's what usually brings so many folks into real estate is that, like, that's what we got started on doing BRRRR
Mm-hmm.
before it was even called that. And I didn't know this
There's
was
no
a thing.
hashtag BRRRR back in 2008. Tell you
Yeah,
that.
I just I knew everybody at banks because working at a car dealership. So
Mhm.
I could talk to them and I'm like, hey, if I buy this house and pay cash for it and renovate it, like not only would they refinance it and give me all that money back, but we were actually taking out extra money because we bought the property right. We did the repairs right. They only give you a 70% back and plus minus your closing costs. And we were still under that to where I'm like, holy cow, babe, like they gave us another $10,000 on top of what we came out of. Like we're up 10 grand and now we've got this property. And that's what we really got into doing. And, I love your story because you're living the millionaire next door life.
Well, I wanted to touch on that because I think it's going to resonate with a lot of listeners of like, yeah, like you said, like sometimes we have these preconceived notions of like the rich investors, but the reality is most people got started and like even we lived in a nice house while we were burring and all of that, but all of our friends were out buying the McMansions and like, why don't you guys get a bigger house? And, it's just, but it just didn't, that wasn't how we were thinking, to us, it was like, let's grow the properties. And then, once we get to a point, and then we were maybe thinking of building, but I just love that because it's not something most people talk about. It's like everyone's keeping up with the Joneses with the BMWs and the nice cars and the nice houses and all the fancy things, and they're broke.
Well, think about it. How many times have our friends going out and buying these 4,000, 3,000 square foot houses?
Putting in
It's
pools.
putting in pools.
Yeah.
It's the four of us. It's you and I and two little kids. So
Mhm.
we had a 2,000 square foot house, and it wasn't like a brand new one. It was built in the 80s. And while everybody else was doing this, we just kept on stacking properties.
Stacking
So,
houses. So
uh,
I think that what you're saying is just so key. And those listening, like, take some notes here. You know, there's so many ways to get started in real estate. And I think the hardest part for most people is that first property.
well, they say that wealth is quiet, and really, when you're fake wealth is loud,
Yeah.
right? So, be that millionaire next door where you're driving that 10-year-old paid off car, owning properties where people who, drive nicer cars.
And I gotta ask, did your wife like house hacking, or was that like you had to kind of talk her into that a little bit, or how did that conversation go?
Oh, I got a cheat code on that. Um, I married a woman from Asia. And so she lived with family her whole life, and she was down for it. In fact, she was like, I kind of don't want to be home alone while you're traveling for work, because Monday through Friday I
Okay.
would fly to other cities. But even if you don't like living with people, you can still buy a duplex, triplex, or fourplex, live in one unit, rent out the others. We didn't have kids at the
Mhm.
time, we didn't have animals, so I get that that's like rough for some people to wrap their head around. But buy a duplex.
Mhm.
You got your own yard. You got your, at least here in Houston, they come with your front yard, your backyard, everything. But my wife,
So, what's business like today? So, obviously, you guys are growing a portfolio. Obviously, you're doing the right steps. You got to get into your big house now, like what you mentioned, and,
There's your safe
and
area, and you're able to not hear gunshots,
well,
hopefully.
and you do the affordability chart, right? Either we have jobs that pay our bills, or we have assets that pay our bills, right? And you're at that point right now where you're able to do that. So, what's business look like today? I
well,
know Burr has been a little tricky right now because some of these folks listening are like, hey, that might have worked then, but these rates right now are a little bit high for Burr. And, in South Florida, we've got some investors that are definitely struggling. Say, I haven't bought a rental in 2 years because that's what they've been trying to do.
yeah, Burr ain't what it used to be. I can tell you, markets are cyclical. Now, on my podcast, I've interviewed lots of people who are still doing Burrs, but it is far, far away from me here in Houston, Texas, like away from the coastals and the major metros. So I'm real
Are they
estate.
making money doing that right now, though? I
Uh,
mean, you could do it, but it doesn't mean it's making money.
some of the markets, I think they are making money. But the problem is that a lot of these markets where it makes sense, I don't think you're going to see a lot of appreciation. So it's kind of what you see is what you get. And 10
Mhm.
years from now,
Midwest.
yeah, Midwest, Northwest Arkansas, Central Tennessee, Northern Alabama, some areas like that where they're just like, they're, someone showed me their numbers, someone I did a podcast with. Um, and they showed me their numbers after the podcast, and I was like, wow, this is like Houston was 9, 10 years ago. Only difference is I think in 10 years, they're not going to see that appreciation in the market that we saw here in Houston or that you might see in Florida. And that's where most of the money's made, at least on the traditional side. In creative, you can structure deals more creatively. Um, but I just wanted to touch real quick on something that you said. You said like real estate investors on these big bad Scrooge McDucks. I had to double check my numbers on my phone. 80% of single family rental units are owned by people who own 9 units or less. That's how they define mom and pop. So 80%. So if you guys go and look for houses for rent, even though the media might tell you it's all BlackRock and hedge funds and blah blah blah, and let's regulate the tar out of houses, 80% of the single family homes that are for rent, that are rental units, are owned by people who own 9 units or less. So it's
So those are small time investors, and I don't mean small time.
Well,
Mhm.
how do they
They still,
know if you put it in like a land trust?
That's a good
well,
point.
yeah, I was gonna say I don't know how they
For
would
those of us who do.
because I'll tell you what, you do a search and I've learned this from Bob Bloom and many others. If you don't own anything but control everything,
There
and
you
so
go.
that's what we work real hard on. So we wouldn't be seen under either
Fly
one of
under the
those.
radar, right?
Boom.
Yeah, and so it's further defined, if I can actually look at my notes here, it's further defined as 10 units to 99 units, only 14% of houses fall under that. So that's kind of the full-time professional real estate investors like you and me. And then that leaves 6%, which I assume is institutional or maybe just the mega successful investors. I'm sure Pace Morby's in that 6% and some of our other friends that are out there. So it's definitely not what you think when you look at the grand scheme of things. But that's a good point, especially when you do sub two or put things in land trusts or you have LLCs. How do they know?
You
How do
can't
they know?
not with LLCs, but not trust.
Mhm.
But and I think that's the point too. Is you got to find what's currently working, and you got to have a few different strategies up your sleeve. And
Mhm.
so this is what's really great, and why I fell in love with creative back in 2015, 16 when I started learning about this, because I was doing the Burr method, like so many others were, and then I found out probably like 6 years ago it was even called Burr, right? She's like, did you know we're doing this BRRRR thing for all these years? And I had no clue. But either way, if I didn't learn about creative, because we were at the point getting cut off from the banks because, we started reaching their cap. And so this is where I felt devastated because I knew I wanted more than 10 homes for our retirement and for our portfolio. I knew we wanted much more than that. So when I learned creative finance and now I wasn't tied to a bank anymore, I was like, holy cow, I've got a deal that hopefully we're going to write up tomorrow because today's the lady's birthday, but she's got a house in Venice, Florida. And it's a nice house, cute block frame home. And she wants to move and she doesn't really have much equity. She's like, take the house and take over her payments. And so I haven't found a way that's any easier to buy real estate than doing creative. And I know some friends that still love the BRRRR method. I just know some of them are really struggling, especially a year in some of these, like you mentioned, bigger cities like Houston or anywhere in Florida. If you do the BRRRR rate method right now, your payment is going to be significantly higher than what you could rent it for, and you're going to have negative cash flow. It doesn't work. So
Yeah, this is
I
the
got a lot of
time.
folks sitting there waiting.
This is the time for creative finance. This is the part of the market cycle. We have a lot of major metros where markets are soft. We have a lot of days on market, a lot of inventory. This is the time to start taking properties creative. This is the time for it to shine.
Well, Austin's a great example. Austin had lost 24% value like the last year or two, as far as the values in their market. And so if you've had anybody who bought a nice house in the last 5 years, which there's been a huge,
Like,
trend of that happening, a lot of those people still have rates at 2 and 3%. And in Austin is a city, it's going to continue to grow. Even if it has a pullback, it's still going to continue. California people are moving to Texas, whether y'all like it or not. It's just going to continue to happen. So as that does, now's the deals. Now is the time. In 2008, 9 and 10, when all the investors were leaving the market, real estate's crashing, banks aren't lending. There was all types of stuff going on. My wife and I were secretly, quietly growing that portfolio and nobody was looking. Nobody was doing the deals. And I'll be honest with you, some of the very best properties that we've bought were all back then. And my only regret, if there is any, was I wasn't buying more of them back then, especially if I knew creative finance back then where I didn't need to do the slow process of banks and waiting for the houses to hit on market. Because I didn't know about yellow letters or direct mail. I didn't know about that until we did that, 2016 or 17.
17, yeah.
But that's how we got our very first creative finance deal, was direct mail. And guy inherited his grandfather's home and he wasn't like, I'm not taking some lowball offer from you investors. And I was like, no, I could pay your price if you're open to me doing in payments. And he's like, well, what would that look like? I'm like, your price. I'll pay you $500 a month. And that's going to go towards what I owe you. And he was like, yeah, do that. And he didn't even charge us interest. And when I tried to give him the $100 down, he was like, I don't even want your money. So gave it to him anyways. But that's what it was. So direct mail, I love it. It's really been helpful for us. But man, gosh, when you're spending $3,000, $4,000, $5,000 a month, sometimes that gets a little scary.
Yeah, it does.
Especially if you haven't done a deal and it's been 3 or 4 months, or maybe you're listening and you haven't had some professional advice on how to do this the right way. But you're like, I'm just going to go spend $3,000 on mail. Well, if you don't know how to handle the leads when they do come in, you're just going to burn money. So get
And
some
I wanted to
training on how
touch
do it.
on that. Yeah. Just like the power of coaching, because I feel like, when sometimes people, there's a negative connotation around, or I'll just figure it out on YouTube. And, I know Joe always likens it to, some people go to college. Like I went through everything, got my master's degree. And like, that's not, nobody really bats an eye at that. But, oh, you guys are going to pay a coach to learn how to do what? And so there's like still a stigma there. So I'd love to kind of just hear your thoughts on coaching and, why you find it impactful.
Well, one thing that I was just talking about this on another podcast this morning is like, I wish I had got a mentor sooner, because that 4.5 years where I rested on my laurels in that house hack, I was afraid to take that next step. And when I did, I was like, oh, I can now keep this property and I can keep buying more properties. And I just wish I would have known that. And if I had a mentor at that time, which now I've been through several coaching programs, I've been a part of a number of masterminds. We met each other at a conference in Florida this year, and I've been in a multifamily coaching program, and I've been in single family coaching programs. And if I had known it back then, like, I couldn't imagine how well my business done. Like, I retired when I was 35 from my corporate job. My wife is still working. Our next goal is to get her out. I've been involved in 200 doors, whether it's buying, selling, holding, or I've invested in multifamily. So I've been involved in 200 doors one way or another. But I just like can't imagine like like what would have changed my life if I had got a coach, a mentor, the right people around me. I mean, I got there. It's great. I was going to meetup groups and stuff, but that 4.5 years where time went by, I watched people build fortunes in that time at these meetup groups and just not taking action because there was nobody to work one-on-one with me. There was no one to hold me accountable. There was no one to work on my mindset. I was just going and drinking free beer at a real estate meetup. That's really what it came down to while I was house hacking. And I had to raise my financial thermostat because I thought I'm house hacking, which is letting me live for free, and I'm plowing my money into savings, and we paid our cars off. And I thought like this is what it means to be rich. But only when I took that next step, like I had to raise my financial thermostat. And what that took was joining a coaching program
Hmm.
to change that for me. And then
Well, I think when you like you said though, you get around the right people and you realize what your definition of wealth is might be a little bit, and it opens your eyes because when you start getting around some other like big money people, you're like, oh my gosh. And Jen's like, are we playing small ball?
Hmm.
Like, should we start buying more deals? And so the way the market is right now, slow and steady wins the race, and I get it, but
And it's all in your head. It really, truly, a lot of it comes from our past, right? Like how we were brought up. Like we talked about yours and the winters off and all of that. But then it's like also like get your mindset right for the future and like what is possible. And you sometimes it's being in those rooms where, holy moly, I didn't realize that. You know, what's her
you can
name?
even do this stuff.
Yeah, Wendy over there, who is as sweet as pie, like a grandma, and she's just, like loaded, and she's all these properties, and
Like
she's so intelligent, and like you would just never know, like she's just like a normal
she got
gal.
cake, girl,
Oh my
load it
gosh,
up.
so that's what I love about these places, like with the masterminds and all the conferences, and now the meetups. You just gotta not be a wallflower either. I feel like that's a important key.
Well, and the thing is, like what you're talking about, Michael, it took you 4.5 years to do your first deal compared to your second deal. Mine was 8.
Hmm.
wow.
So 8 years. I did my first deal in the year 2000. Okay. I didn't do my second deal. My first one was a wholesale deal, made a huge check, but you get wrapped up in
He
jobs
was
and
waiting for me.
I was waiting for her. But 2008 is when I do my next deal because I met Jen and the market was dipping in '08. It was like on fire in the early 2000s. So finding deals were hard and finding off market was tricky. But man, when we started finding in '08 and 9, it was 8 years. And a lot of that, I'm sure I could have done deals in between then. But like you said, like lack of like supervision, and it wasn't supervision, but it was like getting around the right crowds. I did not do that for 8 years. Right? I almost like lost sight of it, but there was something passionate about real estate. And that's what I love about real estate is you could take little breaks, you could do things like that and always come back to it. But if you ever like my regret, those 8 years where I could have really been working at my business a little bit more instead of going out as much, instead of spending so much on the frivolous things we do is when we're in our 20s that I could have probably even spent more time and resources to learn from way smarter people who have already done these things. And but it was challenging back then, so I could feel you. But now it's a different story. Now it's been never easier to communicate with other people.
It's
So
letting go of that guilt because I could look at it like, oh, I spent all that time and money and effort, into New York State education and all of that, getting my master's degree, all for what? But it is what it is. And
well,
then you just look forward.
and I think about it like I didn't want to say nothing, but like we make more
Oh, I know.
on one creative finance deal than Jen would make in 2 or 3 years teaching.
It's disgusting. Like
2 or 3 years
that
of
was my
teaching.
mindset of like, oh, this is what I'm gonna make. My $1,000 every 2 weeks. I don't know how I survived. Barely.
Oh, and so that's the point of what I love to do, and I like creative too. Just because you could that deal of a lifetime, that home run deal, like what would that do for your life if you could find one of those a month,
Mhm.
or even one every quarter, or even 2 a year, right? Like that deal of a lifetime. If you could start getting those more consistently in your life, man, that really could change the trajectory. Because now here you guys are, big old beautiful house. You are able to walk away from your corporate job. Your wife is number 2, going to be out soon, and you guys are just slow, steady doing it. And it's absolutely inspiring to see so many people where you didn't come from huge wealth. I didn't come from huge wealth. I mean, John, maybe.
But you didn't quit. Yeah.
I'm just kidding. But you didn't quit and you stayed around it,
Yeah.
right? And you kept going. So I absolutely love that.
Yeah, it was crazy because when I first got involved, I kind of stressed myself out. I was watching YouTube and social media. There's guys, oh, I've got 1,000 units and I've done this and done that, and I got $1 billion of real estate. And I was like, man, how could I ever achieve that? But the first guy who mentored me told me, just buy a house a year and your life will be changed forever. Do one deal a year, buy
Mhm.
one house a year and your life will be changed forever. And he later told me, I tell people that because once you do a deal, you'll never buy one house a year after you've done one deal. You'll buy more than one house a year. But I
Well,
like that.
it gets to be addicting. It's like a great hobby, and to me, that's like it's the one thing where if
It's
I'm not working and I have my hobby, that's one of the big ones.
literally your scratch off card.
It is. I don't play lotto. I don't do anything like that. But if there was such a thing, is like, yeah, post your blue ad in groups, get some free leads coming in. Most will say no, most won't work out. But that one that does say yes, my gosh, that one deal could change your whole life. So I just like playing, and I could do it for free, even better. So
Yeah,
like,
I
crank it up.
have friends that are like into sports betting and crypto for gambling and all of these other things. And especially when I was in corporate America, all they did all day long was do like these sports betting head to head. I forget what it's called. And I was like, I had no interest in any of that. Because all I could think about is like, there's no returns you can get from this that are going to match what one of my deals are. So every time my phone rings, that's my gambling. That's my bet. I send out direct mail. Now, today, I probably wouldn't do direct mail. I would do free lead generations through social media like you guys teach. I would do maybe some PPL, something like that. I would let someone else generate the leads for me now because of the way that the market has changed. But that's what the only thing I want to leave to chance. I want to talk to sellers. I want to go on these sellers appointment. I want to walk these properties because no one's built generational wealth from playing a slot machine, buying crypto, doing sports betting. But it was like everyone around me was like, it's just distracted. Like even I play video games and all my gaming buddies, all they're worried about is like, they were worried about like the GameStop stock and like now go look at that thing. Where's that at? My real estate's done nothing but go up. And
Mhm.
they're like, oh, I made, whatever, a few bucks in crypto. And I'm like, well, if you're being honest with yourself, how much money have you lost, before you got
Well, and
there?
the funny thing is, like, I remember working with one of my guys at the dealership, and I'm not gonna say his name because he's a good friend of mine, but he went on one of those sports bet things doing fantasy football. He won $25,000. 1 week betting whatever, and it doesn't always continue, like, how much he's lost, right? But that one, he made 25 grand. The rest of the dealership thought he was, like, walking on water. This is the most amazing thing. You're gonna buy lunch for the next 20 years and all these great things. And meanwhile, like, I'd buy another rental property, and they're like, "What are you even doing? Why are you wasting your time, like, building houses? Like, you got a job." And I'm like, "You guys think he's doing awesome because he's betting on, like, gambling, but buying real estate is something that is, like, completely out crazy." But now these are the same guys, like, they just won some award for the Chevy because it's a dealership, and I look, it's the same guys and girls all sitting there. They all look a little bit older now. Some of them lost a little bit more hair, and they're still doing the same thing, and they were miserable 10 years ago, and I look at the pictures now, and none of them are smiling. So maybe that,
but
like you said, that
but we
sports
are.
betting thing that well, the sports betting thing doesn't pay off, and it's like we always wanna get, like, rich quick
Well, that's the
overnight, but
thing
that's
is
not how this works.
it's not how it works, and it's the quiet, it's the diligence, it's the hard the quiet out the weeks, hours, like, the time that maybe you don't do anything, but then when you finally are ready and something starts clicking and you just take that messy, massive action and you just keep going, and I feel like because I didn't understand it at first either, nobody taught me about real estate,
Yep.
and I remember literally one of the first emails you ever wrote me, you're like, "I'm gonna buy real estate." I was like, "What does that even mean?" Like, I own my own house, like, you own your house,
She
like,
was
what
house
the heck?
hacking her house.
Yeah, didn't even know that was like a term back then, but,
Yeah.
my girlfriend, lived in one of the rooms and she paid me I just wanted help with my mortgage. I was like, I'm on teacher salary trying to pay for my master's degree, so that made sense when looking back
So when we met, you were house hacking. I've already wholesaled.
and you're ready to burr.
I'm ready to burr, right?
It was destiny.
And we're accidental landlording shortly after because Jen moved in with me. And then we
Yeah,
ended
so
up
then I was losing money essentially, but
but so that was like, our first couple steps into real estate. So sometimes if you're listening, and Mike, Michael, I want to give them your contact info. But if you're listening and you're like, hey, like I might mess up, like in the beginning, it is a little messy,
Mhm.
right?
You
There is
will
some
mess up,
things.
like, get ready, like, you're gonna fall down, but have people around you to help you back up.
Well, that's the point. And this is where I was thinking about it is like if you've talked to an investor who said, "I've never lost or I've never failed," they are either lying or they're leaving money and deals on the table, right? They're missing opportunities because some of these deals, like we lost money on a seller finance deal, and I did a whole podcast on that, and I only did it with 5 grand down, and the lady gave me a 1.5% interest rate. How do you lose money on a deal like that? Well, I can write a book on it now, right? So, but the challenge is how to do it right because really besides that, maybe one or other out of all the deals that we've done a crap ton. That's it. So it's not taking the risk. And so if you're listening here, and you're wanting to get into real estate, maybe you've already done some deals and you're looking to scale your portfolio. And like what Michael even said, like BRRRR is a big challenge right now. There are ways that you don't have to wait. So if you feel like I'm stuck waiting till the rates come down and the whole Fed's talking about, like if Feds drop rates and your rates come down 0.25%, is that going to change anybody's decision on buying a house?
Absolutely not.
Yeah. If it comes down to 0.5%, is that going to change? Like, oh, now I could afford it. Like, it's not. It might help, but it ain't saving the day. So instead of waiting to somebody to come save the day, invest some resources into your education and learn all of the exceptions, the loopholes, all of the things that these super wealthy people have known that they're not telling us about. I thought this was the only way to buy houses. So you don't have to wait in. And if the market's high or low, there's still hot deals out there.
There is, and it's a lot of the market's softening everywhere. But I was surprised when you told me you guys invest in some of the hottest markets. You got upstate New York markets that are like on fire. You're getting like all cash offers and over ask, like it's 2021 again or something.
There's no new inventory and the market's hot. I'm watching us, like, our net worth continue to grow every month. That house that goes 85,000 over asking, that's the new comp in the area. All the other properties that we have in that area, guess what? They're all rising. Meanwhile, who's paying off our debt? Not me and Jen, our renters are. And we're actually getting some money every single month while having tax deductions. So the four ways of wealth is that. Then the multiplier is time, right? And you start owning these things and doing that strategy, but for a long time, it's a recipe for success. So I absolutely love it. So
And a job can't compete. There's no W-2 full-time job that replicates this.
not many people get wealthy multimillionaire from a W-2. That's for sure. So Michael, if folks wanted to reach out and they wanted to connect with you, they want to learn more about you, they want to follow your journey, where are some of the best places they could find you?
So I'll give you a couple, and I'll start with the big one. I give out my cell phone number because no one's giving. Yep, nobody's given me a reason not to do it yet. So please don't be the first one. But text me, do not call me. I get so many spam calls, I'll never pick up your call. But it's 832-301-9672. If you got a deal, you got any questions, or you got something here in the Houston area you want me to look at, if you just want to say hello, shoot me a text. But
You're going to get some text messages. I'm just heads up. You're going to get them calling and texting you. And especially if you're listening and you're in the Houston area, y'all need to be linking up, right? You probably already know the good spots to go to.
Yeah, I can tell you in 30 seconds if your deal's worth your time or not, especially if it's in the Houston area. And
well, we actually have some clients.
I was going to say, we need to definitely.
I got to get you hooked up with Andrea. But we have some clients in your area too. So
awesome.
She's finding opportunities. So I definitely got to, as soon as you said that, I'm like, wait a second.
I love that. 30 seconds. We're going to time you on that too.
Any friend of Joe and Jen's a friend of mine. If you guys are in the Creative Finance Playbook community and you guys are in the Houston area, especially, just reach out to me. Make sure to drop the appropriate names, and I'd love to help you guys out any way I could.
Oh, thank you.
And then I also started a podcast, the Be Someone podcast with Michael Hoang, because we have this famous bridge in Houston, and I have it on my wall over here next to me that says Be Someone. And every time someone defaces it and changes the graffiti, someone in the community goes back and rewrites Be Someone. And so all through my life, I was driving under this bridge going into Houston, and who I wanted to be just kept changing. When I was blue collar, I wanted to be white collar. When I was white collar, I wanted to have no collar at all. And so all along the way, I'm driving under this bridge that says Be Someone. So that was what I named my podcast. And on every episode, I bring on a different guest. You guys are on there too. My goal is to give actionable steps in every podcast where you can go for free and go out there and find deals, start taking action so you can be someone. It's on all platforms. And then my Instagram is @MichaelBeSomeone, in case you didn't have enough ways to contact me already.
I love that.
That's awesome. I love that story. I didn't know that was where you got the name of that. I've never been to Texas. It's on my bucket list. So.
I've been there. I've been in Houston. Used to live in Dallas. It's a great place. Some of the best barbecue in the world comes out of Texas. Those boys and girls down there, they sure know how to do some brisket.
Yes, we do.
That is for sure.
Oh, thank you so much, Michael. I know you're a busy guy, so we appreciate you being here. And if you're listening, make sure you take a moment and subscribe to YouTube. Give us a review below. Let us know what questions you might have, and make sure you got Michael's cell phone. Not every guest gives that. So that was a gift for you guys listening today. Thanks again, and we'll see you next week.
Thanks, guys.